SCHD just dropped to $26.95, and while everyone else is panicking, I'm about to show you why this could be the best opportunity you'll see all year. When dividend stocks go on sale, millionaires back up the truck. When they crash, billionaires get excited. By the end of this video, you'll understand exactly why market drops are actually wealth-building opportunities and why SCHD's current weakness might be your biggest strength. Let's be real about what's happening. SCHD closed 21st July 2025 at $26.95, down from $27.02 the day before. The trading near the lower end of the 52-week range of 23.87 to 29.72, and it's been underperforming the broader market significantly in 2025. This underperformance isn't new. Dividend stocks have been getting left behind as everyone chases AI and tech stocks. But here's what most people don't understand. When dividend stocks get ignored, that's usually when smart money starts accumulating. But here's what most people don't understand. Dividend stocks like SCHD don't move the same way as growth stocks. When the market gets scared, when interest rates shift, when investors get nervous, dividend stocks are usually the first to get sold. Why? Because they're seen as boring. While everyone's chasing the next hot AI stock or cryptocurrency, dividend stocks are just sitting there paying steady income. They're not exciting, they don't make headlines, they just quietly make people rich. Think of it this way, if your favorite restaurant suddenly offered a discount on the same great food, would you be upset or excited? That's what's happening with SCHD right now. Same great company, better price. Here's an important note, SCHD underwent a 3-for-1 stock split in October 2024. So when you see prices around 27, that's the post-split price. Your total investment value didn't change. You just own more shares at a lower per share price. Here's what I've learned after years of investing. Market drops reveal who's investing and who's just gambling. Gamblers think, oh no, I'm losing money. I need to sell before it gets worse. Investors think, great companies just went on sale. Time to buy more. Warren Buffett has a famous quote, be fearful when others are greedy and greedy when others are fearful. This is what he means. When SCHD drops, nothing fundamental has changed about the companies inside it. Texas Instruments is still the leading semiconductor company for analog chips. PepsiCo is still dominating the global snacks and beverage market. Chevron is still one of the world's largest energy companies. Merck is still creating life-saving medicines and vaccines. The businesses are the same, only the stock price has changed. And stock prices are emotional in the short term, but rational in the long term. Let me explain why SCHD being down is actually fantastic news for long-term investors. Reason number 1, higher dividend yields. When SCHD underperforms but maintains its dividends, the yield actually improves. SCHD's current dividend yield is 3.79%, with forward yield at 3.85%, more than triple the S&P 500's yield of around 1.2%. You're getting paid nearly 4% income per dollar invested, while growth stock investors get minimal dividends. It's like getting a raise without asking for one. Reason number 2, more shares for your money. If you're doing dollar cost averaging, that's investing the same amount regularly, market drops are your best friend. Your monthly $500 investment now buys more shares than it did when the prices were higher. Those extra shares will pay dividends forever. So temporary price drops actually increase your long-term wealth. Reason number 3, compound growth acceleration. If you're reinvesting dividends, which you absolutely should be, those dividends are now buying shares at lower prices. This accelerates your compound growth. Think of it like buying more seeds during a sale. You'll have a bigger harvest later. Reason number 4, less competition. When markets drop, scared investors sell everything and sit in cash. That means less buying pressure, which creates better opportunities for patient investors like you. Here's something that'll blow your mind. SCHD being labeled an underperformer has happened before, and patient investors who held on were eventually reported. SCHD has gone through multiple periods of underperformance. 2023 was particularly brutal, with SCHD falling to nearly the bottom 10% of its category. Yet over its entire history since 2011, SCHD has averaged 12.33% annual returns. For most of its existence, SCHD was consistently in the top third of its category for nearly a decade straight. Even with recent underperformance, SCHD delivered 3.45% total returns in the past year, including dividends. The pattern is clear. Dividend stocks go through cycles. Sometimes they are in favor, sometimes they're not. But the underlying businesses keep generating cash flow and paying dividends regardless of market sentiment. The companies in SCHD have survived world wars, the Great Depression, multiple recessions, and every market crash of the past century. They're not going anywhere because of temporary market sentiment. Let me tell you what wealthy investors do when dividend stocks drop, because it's the opposite of what most people do. Strategy 1, they buy more while average investors are selling in panic. Smart money is accumulating shares at lower prices. They understand that temporary drops create long-term opportunities. Strategy 2, they remain calm. Rich people don't check their accounts every day during market drops. They know that daily fluctuations are just noise. They focus on the long-term trend. Strategy 3, they focus on income, not price. While others worry about stock prices, wealthy investors focus on dividend payments. As long as the dividends keep coming and growing, they're happy. Strategy 4, they think in decades. Poor people worry about what their investments will do this month. Rich people think about where their investments will be in 10 to 20 years. What they don't do? Panic sell at the bottom. Try to time the perfect entry point, switch to hot investments, make emotional decisions. Here's why SCHD is actually perfect for times like this. Built-in quality control. SCHD doesn't just buy any dividend stock. It owns companies that have paid dividends for at least 10 consecutive years, with strong balance sheets and sustainable dividend policies. These are the companies that survive market downturns. The fund currently holds 103 carefully selected companies, with the top 10 holdings making up about 40% of the fund, providing concentration and quality while maintaining diversification. Automatic rebalancing. The fund automatically removes weak companies and adds stronger ones. You don't have to worry about picking individual winners and losers. Diversification protection. Instead of betting on one company, you own 103 different businesses across different industries. If one sector struggles, others can pick up the slack. Professional management. Schwab's team monitors these companies full-time. They handle all the research, analysis, and decision-making, so you don't have to. Low-cost structure. At just 0.06% annually, that's only $6 per $10,000 invested. SCHD won't eat up your returns with high fees, even during tough markets. Compare that to actively managed funds that often charge 1 to 2% annually. So what should you actually do when SCHD is down? Here's your step-by-step playbook. If you already own SCHD, first, don't panic. Turn off price alerts and stop checking daily. Keep your dividends reinvesting. Let those lower prices work for you. Consider adding more. If you have extra investment money, this could be a gift. Review your timeline. Remember why you bought SCHD in the first place. And if you don't own SCHD yet, this could be your entry point. Better to buy on weakness than strength. Start small. You don't need $10,000. Start with what you can afford. Set up dollar cost averaging. Invest the same amount monthly regardless of price. Plan to hold long term. This isn't a trading strategy, it's wealth building. What not to do? Don't try to catch the exact bottom. Don't wait for confirmation that the drop is over. Don't abandon your long-term plan for short-term fear. Don't switch to speculative investments. Here's what I want you to understand. Market drops are not disasters. They're opportunities disguised as problems. Every wealthy person I know has a story about buying great investments when others were selling in fear. Every fortune was built by someone who saw opportunity where others saw danger. SCHD being down doesn't mean anything is wrong with the companies inside it. It just means the market is giving you a temporary discount on 103 of America's best businesses. 10 years from now, you won't remember exactly when you bought SCHD or what price you paid, but you'll remember the dividends it generated and the wealth it helped you build. The question isn't whether SCHD will recover. It's whether you'll have the courage to buy when others are selling. If this video changed how you think about market drops, smash that like button and subscribe for more contrarian investing wisdom. Drop a comment below. Are you buying SCHD during this drop, or are you waiting on the sidelines? I want to hear your strategy. Remember, fortunes are made when others are fearful. This could be your moment. Don't let temporary emotions destroy your long-term wealth. Please like this video and subscribe. Here's to your investing success. Profitable investing.